You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
All right. Hi, everyone. It is Friday, and welcome to all the LCMS Traders Club members as well. The 26th of November, the month is flying by here, guys. And I hope everyone did have a little bit of a breather yesterday with the US session being a closed one for equities. And obviously it was pretty quiet overnight for us in this time zone, GMT plus 8. We've just ticked over 11 o'clock here as well, and it's episode 428. And just for the people that are new, either to the LCMS Traders Club or are watching this a little bit later on YouTube, if you do want to check the live feed, make sure you do become a member of the LCMS Traders Club as well. And you can do that via the Jindal Thai website. That's in the actual video itself at the bottom there. So make sure you visit that website. But a quick introduction as well. So we analyze the currencies as follows here on the currency call. So from 11 a.m. Monday to Friday, GMT plus 8, we start the week off with the Aussie and Kiwi. Tuesday, we do the Euro. Pound is for Wednesday. We have yen and gold on Thursday. And then Fridays, we've got CAD and cryptocurrency as well. And in the currency call, we'll discuss the market economic updates, the key support and resistance levels, trade ideas, and of course, much more. And the currency call is going to be very beneficial to both the long-term investors and the short-term traders as well. And here we will go through what could move prices, the possible trade ideas in focus, and we'll highlight the potential targets and also the risks of the trades. Now, a disclaimer here finally, any information shared during this session is not intended to be a trade recommendation. It is solely the views and opinions of the speaker. So please remember to do your own analysis prior to entering in any trades. And again, when in doubt, make sure you ask questions and don't just jump in. We are here to help within the LCMS Traders Club forum as well. So please do that. Now we do have Gimme. Well, we've got an adjusted nickname here, the Real Slim Gimme More Pips as well. And a couple of things to talk about today with him. We've got, we did have the Bank of England Governor Bailey speaking very early this morning. And we also had, I believe it was RBNZ related news as well. So we have Gimme here now to take us away on the economic updates.
All right, thank you, Scott. Okay, yep, Governor Bailey, okay, is trying to explain himself earlier today, okay, over the whole unreliable boyfriend tag on him, okay. So, I think he was trying to actually explain the whole miscommunication issue, okay, between the Bank of England and the market. All right. So, I mean, as you guys already know, okay, recently, I think last month, a couple of months back, Governor Bailey has been, giving a very, I would say, a very positive outlook that the central bank is going to hike interest rate in November, okay, during the meeting, but then they did not, and then it became a disappointment. All right. So it's pretty much like the communication, okay? So in central bank terms, it's called forward guidance, all right? And Governor Bailey, he actually said during the speech earlier today that the central bank is pretty much going to abandon this whole forward guidance as a way to communicate the path of interest rates, okay? So in the past, actually all the while, okay, we will pay attention to the central banks, any central banks, okay, forward guidance, okay, which is why the rate statement, the monetary policy summary or report is very crucial, okay, in terms of having a feel of where the central bank is heading towards in terms of interest rates, okay, in terms of the path of interest rates, whether they're going to keep it unchanged, hike it, or consider a cut in interest rates, all right? But this time around, Bailey said that, we're not going to use forward guidance as a path of interest rates. Of course, they're still going to provide forward guidance, all right? But it's just to highlight to the market the current situation of in terms of monetary policy in the UK is at the moment, okay? So he actually criticized the forward guidance being put in place by his predecessor, all right, Mark Carney, back in 2013, okay? Because back then, Mark Carney actually said that the central bank, Bank of England, will consider a rate hike, okay, when unemployment rate actually fell below 7%, okay? So that was older days, all right? That was back in the olden days, all right? So yes, love Mark Carney, right? I mean, unreliable boyfriend number one, okay? So that was back in 2013, and then it probably worked for a few years, right? It probably worked for a few years, but then recently, because we have this whole this high level of uncertainty, all right, caused by COVID and things like that, for some reason, okay, this condition, okay, of hiking interest rate when unemployment rate is below 7% is no longer that reliable, okay? So Bailey actually said that this is, I quote, is pretty hazardous in an uncertain world, all right? Uncertain world right now, COVID, especially we have this new COVID variant coming in, all right? So because of that, I think Bailey's trying to make it official, okay, that, the forward guidance from now on is not going to be a very strong clue as to where the central bank is heading from the interest rate point of view. Okay, so he actually said that instead of this whole hard form of guidance, hard form meaning it's clear, right? It's clear cut. When unemployment rate falls below 7%, then central bank considers rate hike. Okay, so instead of this hard form of guidance, okay, the current, what he calls it, the softer evidence-based guidance, okay, that the central bank will be using is actually will be to remind people of the policy framework. Okay, I think recently, actually for a couple of months already, he has mentioned something like, something along the line of, if interest rates were to continue rising, okay, then the central bank may actually consider a hike in inflation. If inflation were to continue rising, okay, then the central bank will consider a rate hike, okay, even if it were to be hiked before quantitative easing has ended, okay. So this is what he means by a softer evidence-based guidance, it's actually to remind people of the policy framework. So the recent comments made by him, we can pretty much take it as just a reminder of the policy framework. Okay, but once again, he just denied that they did not mention anything about rates hike in November. Okay, so as well, they did not mention anything about rate hike in December as well. Okay, so because of this, okay, my personal opinion is that the chance of a rate hike in December has just fallen slightly. Okay, because that's what the market is going to interpret this speech by Bailey earlier on today. Okay, because they don't want another disappointment. Okay, and because of this disappointment, the first time around in November during the meeting, the pound actually took a plunge, right? And then if December more people are going to expect a rate hike coming in from the Bank of England in December. Okay, and if Bailey were not to clarify this whole situation right now, okay, and if they were to postpone a rate hike, or just repeat this whole thing again of we did not mention anything about rate hike, okay, then we are likely going to see how probably weaken much further than the first time around in November, right? So because of that, just keep in mind that the chance of a rate hike in December coming from the Bank of England is just fallen slightly. Okay, nonetheless, okay, we'll see how it goes. I still believe a rate hike is on the table. Okay, because like what I've mentioned many times, inflation has been crazy, right? Recent inflation in the UK has risen to 10-year high level, right? So if it carries on, going high, going towards the sky and things like that, it's just a test of patience, just a test of Bank of England's patience. Okay, how long more can they actually tolerate? Can they actually endure this ever rising inflation, okay, and coming in, the inflation pressures coming in from rising oil prices, and of course we have new variants and things like that. Okay, definitely we're going to see supply chain disruption to be more lasting, okay, more persisting than initially expected, okay, by many of the central bankers. Okay, so yeah, with that, the Bank of England will be meeting again in December, December 16th. All right, so I'll update you guys again on what to look out for. All right, so that's for the Bailey's speech earlier on today. And we also, heard from Assistant Governor Hawksby from the Reserve Bank of New Zealand earlier today as well. Okay, he actually had an interview with Bloomberg. All right, and this is actually more positive and more concrete. Okay, it's more reliable. All right, so he actually said that inflation expectations are going to be absolutely key for us. There are things that could make us go faster, okay, in terms of rate hike, and I think inflation expectations is one of them. Okay, so recent inflation expectation, I think, has hit a 10-year high. Okay, so that is something that the central bank will be paying a lot of attention to. And if it keeps going up, going higher and higher, then the central bank may actually consider a more aggressive rate hike. Okay, more aggressive meaning, instead of the standard 0.25% hike in interest rates, they may actually consider a hike by 0.5%. All right. And another thing that he mentioned is, I quote, interest rates have moved a long way here in New Zealand. Mortgage rates are nearly 2% up from their lows in January. And ahead of us, we are going to have to navigate having COVID in our community. Okay. I think I mentioned a couple of days, was it yesterday? Yeah, yesterday. Then New Zealand is going to open up, right? New Zealand is going to start living with COVID from December onwards. Okay, so no more zero COVID policies. Okay, so with this whole opening up of economy, no more zero COVID cases policy, and this whole mortgage rates rising like so high up, above the sky and things like that. Interest rate hike will definitely be something that the central bank will be carrying out quite often, okay, from now on. All right. So my personal opinion on this is this. All right. Expect more interest rates hike from now on. Okay, that's one thing. It will become a default. It is actually pretty much a default already for the Reserve Bank of New Zealand. All right, 2 consecutive hikes have already been taking place. Okay, and another thing to note is we may actually get to see a higher level of interest rates, like a 0.5% hike, if if inflation expectation rises too fast. Okay, I don't know, like maybe the next time around. I think the most recent release was, I think, 2 point something percent. Okay, so if they were to go higher than that, it's probably going to break, like, I don't know, maybe 11, 12, 13-year high and things like that. Okay, so at least the communication that we get from the central bank, the Reserve Bank of New Zealand, is much clearer. Okay, we know what to look for, in this case, inflation expectation, and we know the consequence. Okay, in this case is a faster rate hike. Okay, faster pace of interest rate hike. All right, so the RBNZ will be meeting next in 2020, 23rd of February. So they're probably going to take 2 months off this whole monetary policy meeting. So from now until then, we probably get to see quite a bit of economic data releases. We may actually get to see one more, data release, quarterly release of the inflation and the employment figures. Okay, let's just pray hard that the data turns out to be good. Okay, and then if inflation expectation were to rise, then in February we may actually get to see a 0.5% hike. All right, otherwise we can expect a 0.25%. All right, so that's it for the what Hawksby has shared. Okay, and if you guys want to know more about what went down during the RBNZ's meeting on Wednesday, okay, I actually wrote up an article. I'll be pasting the link later. All right, you guys can check out the article on Forex Trading Asia, and yeah, that's it for the RBNZ. Okay, before I hand it back to Scott, Not sure how many of you have, okay, before the currency call, has actually looked at the market. Okay, we're actually seeing some. Well, I was actually talking to Jean and another colleague of mine that we are seeing all red. Okay, all red coming in from the risk currency. I think, you know what, I'll just do a quick share of the charts. Share screen. All right. Okay, so over here we see pound dollar, euro dollar, Aussie dollar, Kiwi dollar, dollar CAD, and then the second row from the left to the right we see pound yen, euro yen, Aussie yen, Kiwi yen, CAD yen, and then the third row from the left, dollar yen, dollar francs, and francs yen. Okay, basically we see a strong sell-off in risk currencies from pound, from Aussie, from the Kiwi, from the CAD, against the US dollar, okay, except for the euro. We are still trying to figure out what's wrong with euro. Why is it so strong? Okay, but you know, you can see
it looks like the euro. It looks like the euro is going to start dropping now, just on your chart right now.
yeah, I think it's just slow. Okay, it's just slow for some reason. I have no idea why. Okay, so yes, no doubt okay, to be honest, yesterday was Thanksgiving. Today is actually not an official bank holiday. Okay, so I don't know, some traders may be back in office trading to, you know, because just to respond to this whole new COVID variant, okay, coming in from I don't know where. Okay, so definitely this new COVID variant is going to have an impact, a negative impact on the market. Okay, so if you guys feel like, you know, you want to catch up before the month end, you know, bring your P&L up higher, yeah, today you guys may actually, you know, get some trade opportunities. You know, just try to avoid euro dollar for some reason. You know, it's like, you know, I'm not sure if this is going to be a real move or it's going to be some unreliable move. Okay, but yeah, the yen pairs looks good to be shorted. Okay, the francs looks good to be shorted as well. Okay, let me just go to the other page. Wow. Okay, we are seeing pound strengthening against what? Aussie, CAD, New Zealand dollar. Yeah, and it weakens against francs. So yeah, we can see over here we have pound francs, we have we have euro francs, we have Aussie francs, Kiwi francs, and CAD francs. All red. Okay, it's just a patch of red. Okay, so yeah, you guys, you know, if you have any other questions and things like that, just put it in the Ecofin trading platform. Yeah, I'll be looking at the market today and we can just discuss over there. All right. With that, are there any questions? Dollar Sing from Shiyun. Okay, I'll take a look at Dollar Sing later. Maybe it's just good for shopping, Black Friday shopping. Okay. How much longer can Gimmy's nickname get? I don't know. I'll try to push Zoom's limit to the threshold if I can. Okay. No other questions. Okay, as usual, just post it in the Ecofin platform. All right. With that, I will hand it back to what was it? Shermanator.
That is correct. Thank you. Give me more. No, the real Slim. Give me more pips. And again, guys, if you are watching this and you're wondering what is up with Forex Briefcase, just click the link there, or in the chat thread, there is the Forex Briefcase section as well, because it's another, you know, and we still do have more time in the week as well. So we do have a managed account service, and I would strongly recommend getting onto that as well. Look, I will briefly touch upon the US dollar index. I just have a couple of things to talk about on the chart here. You know what? I am someone that will be transparent. I've got the chart analysis here from yesterday in regards to the pullback that I thought, you know, was potentially on the cards, just given the fact that we did have a big significant holiday in the US. FX markets were still obviously open, but you can see the influence of the US traders because it was very quiet as well. I mean, if you did trade, I hope everything was to plan, and I hope things went okay, but I didn't. And like Gimme was talking about as well, the risk sentiment shifts pretty aggressively today, and I was in the middle of it all as well. I do trade the ASX session in the morning as well in Oz. And yeah, I can testify. I'm glad I have the Forex Briefcase account to balance out things, because it got a little red, unfortunately, for me. So, but still a good week, still 1 hours everywhere, to be fair, thanks to Forex Briefcase. But, you know, with this US dollar, I really see, you know, this breakout most definitely taking place. And I shared some news upcoming for next week as well. And it's just inevitable that we are going to see some more upside, especially just seeing how resilient it is from a price action standpoint, that, you know, people are still, you know, keeping us afloat. We do have a little bit of trade with the US session closing at 1 o'clock GMT +8, very early Saturday morning. But again, volatility, well, liquidity will be down a little bit because a lot of people probably won't come in at the office, you'd think. So, but again, there's no US news as well. So just be aware that we could still see a little bit of a dip and then, you know, buyers coming in. So I'd like to see that, but really a breakout through 97 is more than likely looking to take place as well for the US dollar. And this trend continuation is in play as well. So be on the lookout, guys, for what's happening in the LCMS chat as well. Because there'll be, you know, if there are any opportunities, we'll share them. But we do have crypto after Jin goes into the CAD, which is seeing a little bit of buying right now as well. So I'll send it over to Jin now for his thoughts and any potential trade ideas as well.
All right, thanks for that, Scotty. I've just been distracted. I've been looking at trades. Market has been moving quite a bit. Well, let's look at the US CAD. First off, check out the news, forextradingasia.com economic calendar. Today being Friday, what you'll notice with the focus on the US CAD or for the Canadian dollar, we don't have any news. So what I'll be telling you, trades for today might be quite interesting, but it'll be more towards next week as well. With that, why I say that is because on Saturday we have some budget announcements from the Canadians, but not too concerned about that at this point. Monday next week, nothing on the Canadians, but you see a lot of news. Okay, Monday next week, you see some news on the Canadian side. These are not usually big price movers. I would actually focus more on the news released on the GDP on Tuesday night. Tuesday night from the Canadians, GDP month on month expected to go from a 0.4 to a 0.7%. Quarter on quarter, you can see based on the previous, it's actually dropped slightly. We've seen GDP drop a little bit, but I think that in this quarter, we could be looking at a bit of a recovery for the quarter on quarter number. So was a minus 0.3%. I think it would do quite well at about a 1% probably because of how the month on month GDP number has been performing. So looking at possibly some strength on the Canadian dollar on Tuesday next week. Following on from that, Wednesday, we have building permits, manufacturing PMI from the Canadians. Not a big price mover at this point because the focus should shift from Tuesday to Friday next week, where we have non-farm payrolls and also the Canadian employment numbers looking to move from a 31K to a 50, and also with unemployment rate looking to move slightly. I don't think this will be too terrible an impact on the Canadian dollars. But bear in mind what we're seeing now, looking at the charts here. This is the US CAD on the H4 time frame. Before I jumped onto the call, I was actually planning to tell you that if it bounced off 1.2618, we can look to buy it up towards 1.2747. But that move is now done, almost done and dusted. What I would be looking for at this point onwards is whether it can break above 1.2747. So I'll be looking for that move instead. Last time we spoke about it, we said it was going to track towards up from this range. Now look to buy above 1.2747. I would say about 1.2770, a good 30-40 pip stop loss for a very good 150 pip take profit level. Bear in mind with this 1.2926, it is a very high resistance point. Last we reached was in September, and you can see every time we get to that level, is a big tail before a big shoot back down, a tail before a shoot back down. I think that we can still see that track upwards, but at this point, near this region, we're going to see a big reverse again. And this big reverse could coincide with the stronger GDP number next week. It could coincide with the employment numbers next week as well. So we could see a track upwards and then that big turn. So back to the trade idea, look to buy above 1.2747, 1.2770 maybe, 30 pip, 40 pip stop loss. I wouldn't think 150 would be, I think it would be good, but maybe even 120 pips or 90 pips would be a reasonable target. So it's still a 1:3 risk reward ratio towards the upside. And as Kim Hong was sharing with you all, we have been seeing a lot of, well, Aussie dollar dropping, Kiwi dollar dropping, Euro possibly starting to drop. We'll look into that. The pound dollar has been moving down. The US yen, everything has reversed. It's moving back down again. Euro yen breaking that support level. Pound yen dropping below that support level again. But the main thing you want to depend or check back against is the dollar index. It's been sitting right across. So not a lot of movements here on the dollar strength, as much as we anticipated that it could be continuing higher. Not a lot of strength or movements on the dollar. What we're actually seeing is a sell-off across the individual currencies, not driven because of dollar strength. It's primarily because of a little bit of a fear from the new variants. We see that sell-off and that move towards reserve. But I think that because of Thanksgiving and the Black Friday now, we are seeing that little bit of consolidation on the dollar. What will be interesting is later tonight when the US market opens, we might see a brief move before the break towards the weekend. So be extra careful if you're trading over, well, today, because we're going to see possibly a little bit lower volume but higher volatility. So you might get spiked up or spiked down and get stopped out in certain scenarios. Trade with the trend, keep your trades a little bit short term, keep it a bit more managed rather than a set and forget kind of scenario, right? So quite straightforward in terms of trading. Manage it well, keep it short, relax your profits. With that, I'll pass it back to you, Scott.
All right, thanks, Jin. And I have posted the CAD idea as well, just in the CAD discussion section as well, the LCMS Traders Club. So we do have crypto just to finish things off for the week. Now, obviously, a disclaimer here, this is not for a short-term position. So I do have, I've got Bitcoin up now. So this is, let's go to the daily time frame and I'll zoom in here a little bit. And from last week, I did call for wanting to see a break of 54,000 here and then a move lower. Now, that was obviously ambitious. And what we did see last night was that just with equity markets closed in the US, we saw some participants here back into crypto. And look, 60,000 has offered some resistance previously, especially recently in November. And what I'll be watching for is just to see what it wants to do, especially, ideally tonight we might see a cooling off in crypto with people coming in to equities, and then obviously, maybe it does something crypto over the weekend. But I still really want to see, a strike down at 54, because, buying through here, the upside is a little bit limited. And you've just got to think about who's actually coming in. There's continued uncertainties as well, just in regards to the cost of living in the US, especially with just everyday items and rent and fuel. And we could really see, because obviously crypto is high risk. So the first thing people are going to probably do is flood back into a bit of safer stuff. I mean, could be wrong, but I lean towards wanting to see a bit of a pullback on Bitcoin. So I'm leaving it for now. I'll be interested to see what it does at 60,000, but honestly, at least 54. And then from there, I want to see it test. I want to see buyers really come in there if for an entry, because this would be more of a longer term position. Now, Ethereum has definitely really shown that, you know, buyers are keen to keep it over 4,000. I'm quoting in US dollars here, guys, as well. And for this, we're nearly back up to around 46.50 and back to all-time highs. And again, I just want to see it interact up here, and then I'm going to wait. There was an opportunity to get down, but I think Jen and I were talking about this here. This was around last week on Friday, and you know, it just didn't want to break down. So that's fine. More of a conservative value entry is what I'm looking for here. And, you know, we do have ebbs and flows in the market. And normally, honestly, we see this time of year being pretty positive for crypto. So with the upside, honestly limited because it's, you know, nearly all-time highs again, I really avoid buying into near all-time highs, and especially on crypto with the fact that we can see a lot of volatility as well. So I'm just staying cautious here. So nothing exciting. I'll make sure I share the charts and the analysis as well in the crypto chat. And remember, guys, to get subscribed and, you know, fill in your details on the Jindal Tai website for access to the LCMS Traders site, and get signed up to Forex Briefcase as well, because it's something that is just, you know, really just a no-brainer. You know, adds to some diversity in your portfolio, and we're looking like another significant month as well for returns. So those are my thoughts there, guys, on crypto as well. And feel free to ask questions. Gimme shared the article there with the Kiwi. And that is it for Friday. Thanks again for another great week, and hope to see everyone on Monday on the next call. Bye, guys.